Hey everybody, this is David Skarica, stock chart of the day. So we're gonna get right into it. So thanks for the views on my last chart on gold. I guess I'm gonna do more on gold. I know because I'm considered a gold bug, even though I am not. But I know that a lot of people have associated me with gold. I've been obviously I do a lot in junior miners and have been in gold for 25 years plus. So ever since I kind of started out in markets. So yeah, we'll definitely do some more in gold. So thanks. I've got nearly 500 views on that video, and I didn't even really do any advertising or anything for it. Very generic. So um um so anyhow, today we're going to look at rates because the Fed did meet yesterday, and then I'm going to have a couple interesting. I'm going to look at some earnings that happened this week. Google, IBM, etc. Kind of did the opposite. One gapped up, one gapped down. So we'll look at that Friday and on the weekend. So anyhow, what I want to look at here. Oh, and if you go to my website, addictedtoprofits.net, at some point I'm going to data dump everything over to stockchartoftheday.com because I'm turning Addicted to Profits into a consulting service for both corporations and individuals. So anyhow, because I want to keep it, it's a cool name too. And I've got this neon light I paid over $1,000 for on my wall, So anyhow, yeah, you can see this here. So we're going to talk about the Fed. So the Fed met. The Fed is doing a lot of talk right now, right? First of all, they've been doing a lot of talk for a while. If you remember, Fed officials were still saying like 6 months ago, oh, we still have a lot of work to do. We have to do more rate hikes. And I was saying, look, there's one, maybe two quarter-point rate hikes left. I think one happened. And, and now they're behind the curve. Just like they're behind the curve when inflation started in 2022. Remember, when they started to raise rates, inflation was getting up to 8% in March, April of 2022. Now inflation is, forget if the inflation numbers are fake or what. We just have to go by what they follow. Now the inflation numbers are down to like 3%. Rates are at 5%. Banks have all kinds of problems right now. You saw a regional bank blow up the other day. And by the way, that is a risk to the market, is that there's some kind of regional banking crisis, something to watch out for. You always got to be aware of the risks, even though, I still have remained bullish. We've seen this. So let's go look at here, and we're going to go look at, the chance of the rate hike. So it was actually almost a 60% chance they were not going to raise, cut rates, next month. So, and that has remained unchanged. So it's 60% that they won't, 38% that they will. So that's not going to happen. And then we go into May, and May, remember, this here would be 2 rate cuts. So that's more factoring in that if there was one last, I think next month, or 50 basis points. I don't think it's factoring a 50 basis point cut in for May. I think it's more that it's giving you a 35% chance that they'll do one next month and then another one the month after. But we can see we're essentially at a 95% chance that a rate cut is going to happen. So let's just go all the way into December just to make this simple. I don't need to so we can see here, if we look at December, we can see this here is 125 basis point in rate cuts. And we can see if we take these two numbers out, it's almost 95% that 125 basis point in rate cuts was going to happen. And it's still 70% or, chance that 150 basis points are going to happen. And, I think some of that chance is depending on, there's still being that, that 35 to 40% chance they cut rates next month. So basically all that's happened is we've gone from 150 to 125 basis points. And I think the Fed too, I think one of the things, the Wall Street Journal friend of mine told me, had an article today that they said that the Fed kind of wants to start in May because they don't want to start it all in the summer and fall because they think it will look too political, like they're doing it just to try to get Biden elected. I know there's a lot of conspiracy theories on that or the whatnot. So anyhow, all I'm trying to say is really nothing's changed. And I think, like I said, I think the Fed now is behind the curve in terms of rates probably do need to go down. Especially inflation, I think, is just going to go out of control no matter what at this point because of the debt situation. But the banks are sitting on huge unrealized losses. That's for another stock chart of the day one day. We've seen that in the regional banks, last year when there was that mini crisis, and now, we saw a regional bank. And actually this regional bank was one of the banks helping to bail out the other regional banks. And then themselves got smacked in the face. So anyhow, so basically that's basically it. So we can see, here, nearly 95% chance. And this is the TLT, the 10-year bond. So we can see this has rallied really nicely off its lows here. And I don't think it'd be doing this if it really thought the Fed was going to put off the rate cuts, for another 6 or 12 months. So, and if we go look at the yield on the 10-year bond, you can see the yield of 10-year bond is actually almost back to these lows here. I think ultimately this is going to go back down to like 3%, on this cycle, might even go a little lower. So that's where I think right now. And then look at, we basically went from 0.5% to 5% on the 10-year bond. So that's 450 basis points. So if you do a 50% retracement, that'd be 225. We would go to 275. So I'm just using basic math like that. If we did a 60% retracement, which would be 300 basis points, we would go to 2%. And these rate cycles are long. So we're going to kind of take 3 steps up, 2 steps back, or the whatnot, right? Or I guess 5 steps up and 3 steps back. Like that kind of thing is going to happen here going forward. So anyhow, just wanted to show you the Fed meeting yesterday. Basically did nothing to change anything. There's only 40% chance that they will cut rates, which is still pretty high. We're almost 50-50, It's a 40% chance they will cut rates next month. And then almost 100% chance that they're going to start cutting rates in May and do that throughout the year, right? And I think, one reason too, again, to not look political, if they start in May and they basically do a quarter point at every meeting till the end of the year, it won't look political, right? It'll look like, oh, we're just in a rate cut cycle, right? So, and I think that means that in 2025 and 2026, we're going to see issues with inflation. So I think that's really going to happen. So, anyhow, thought I'd show you all this. And again, if we look at, I don't want to, we did gold, but let's just quickly look at gold. You can see gold is up nearly $20 today. We're kind of, again, looks like, I love this kind of saucer type bottom. Silver is back up again today too. You can see one point, basically taking back yesterday's losses. So I think yesterday was almost like a little bit of a tantrum that, oh no, the Fed's not going to cut in March, but they're going to cut in May. And that's what I talked about again in my gold article. In my gold article, I talked about in my gold article, I talked about, that kind of like 2003, we could be starting the real gold rally in April. And again, we're into February now. That's only 2 months away. February is a short month. Okay, it's a leap year this year, so it's 29 days, but we're getting very close, and we're basically 60 days away from maybe when that rally starts. Maybe it starts earlier, I don't know. But it just kind of looks like that's playing out. And I think, by the March meeting, which is, 45 days away, I think it's 47 days away. It shows you right here on the thing here. 47 days away. By then it'll be obvious that the May rate cuts are going to happen. And we don't know too, if the next 2 months, if, it looks like the economy is weakening. Remember, employment's the last thing to tank in a recession. If we're going to see real significant weakness in the economy the next 2 to 3 months, they could cut in March. They could do a surprise quarter or half a point to launch things, et cetera, et cetera. So, but anyhow, if you look at gold, you look at the action in the bond, they're all still saying we're on track for these rate cuts to start in the spring. So I hope you enjoyed this one. And my next one, actually, I got a cool video. Usually I show the videos from the beach. So I'm going to show you a video how I get to the beach. And it's a bit of a trek, to say the least. But a good way to kind of keep in shape.